What's going on, traders? Welcome back to another video. Now, I know I have not put out any videos in a while, and I did have an idea or a concept that I did want to speak about today. I have not obviously planned the video in any way, so we're just going to sort of go at it and see where it takes us, right? So, a lot of people struggle with the concept of understanding which direction the market is more likely to go in, right? Now, we obviously have a name for that, and we call it a bias, right? So when you have a bias, you're predisposed in a particular uh, direction, right? Specifically in trading. So when you have a bias, you're either looking at a bullish market or you're looking at a bearish market, right? I do not believe in a sideways market because the market's moving up and down on some time frame, right? And if you understand it well enough, you can go down to as low a time frame as possible, and you can still execute in a sideways moving market on a higher time frame, but a trending market on a low time frame, right? But anyway, I digress. So the overall understanding is that you need to determine your bias so that you're able to take a more advantageous trade, right? Obviously, trading is all about a 50-50. The market could go up or the market could go down. What you're trying to do when you build your strategy is you're trying to build an edge where it's now going to tip that scale from 50-50 to maybe 60-40 or 70-30 or 80-20, depending on how much you're sort of investing in terms of building your understanding of the market and how the marketplace functions and how price moves, right? So when you're doing that, one of the main things that you're going to want to understand is your how to identify your bias. Now, I'm a major believer in rule-based trading, right? And what that simply means is I believe in executing based on specific rules that are that are obviously backed by data, that are backed by back testing, that are backed by lots and lots of work, right? So there's a whole lot of concepts that I sort of look at, but I basically break it down to a rule-based system, right? Where I have a specific set of rules that I do follow. Part of that set of rules is the rules that I follow to determine my bias, right? So when you determine your bias, you need to understand what type of trader you are. You need to obviously have your understanding of what type of market you're functioning in, or you're performing in, what type of time frames you're going to be looking at, what whether you're going to be a day trader, a swing trader, and whatever. So you've already done all of that work, and you understand what type of trader you're going to be and how your time allocation is going to work, right? So now you're looking at building your strategy, and one of those things is how to identify your bias. Now, when you do that, you want to have a specific set of rules that you're going to use to determine your bias. And the reason for that is because when you get into the marketplace sparks emotion, right? So when you're in a trade, you become emotionally invested at some point, right? Um, if you're in a buy and the market starts to pull back against you, you begin to feel that sort of anxiety. So what you need to have is a specific set of rules that you're going to apply, which you've obviously tested. And these are now going to build your confidence for you to be able to execute and hold trades moving forward. So when you look at your bias, you want to look at specific sets of rules, such as, for instance, if you're the type of trader that looks at so let's say you're the type of trader that looks at support and resistance, right? So support and resistance, I'm just going to put it as SNR. So if you look at support and resistance, one of the things that you're going to be using to identify your bias is your major support and resistances on the higher time frame, right? Now, I've also been looking around as well, and I noticed a lot of people are talking about liquidity at the moment. You know, it's the buzzword at the moment. Everybody's talking about liquidity and liquidity grabs and all of those things, false breakouts and so forth. So that could also be something something that you could be looking for, right? So you could be looking for a liquidity grab. So number two could be a liquidity grab. So at your major support and resistance levels, one of the things that you could be looking for is a liquidity grab. So has the market grabbed liquidity to the downside before it moves up above your major level of support? Has the market grabbed liquidity to the upside before it's moved below your major level of resistance? These are type of things that you can look at as well. Another thing that you could look at on when you're identifying your bias and building your rules is you're looking at perhaps market structure, right? So market structure. So you could be, oh wow, what was that? So you could also be looking at market structure. Sorry about that. I just got my setup changed and stuff. New screens put up, and it's just getting used to using different screens. But anyway, you could look at a market structure as well. So what do I mean when I say market structure? So you're trying to define your bias, right? You're trying to build your rules to identify your bias. So one of the things that you could look at, if you understand market structure well enough, if you don't, I've already posted a few videos about it. You can go check out those videos as well. I think they are appropriately titled for you to be able to find them. So when you're looking at your market structure, you're trying to identify, okay, what is this market doing, right? Is this market currently sort of making what lower lows and lower highs, right? Therefore, you're looking at a market moving to the downside. And if the market is moving to the downside, it's obviously bearish. Is this market making higher highs and higher lows? Obviously, we do know that price action does not move like this, right? This is just conceptual. But anyway, if this market is making higher highs and higher lows, then you can see that this market is moving to the upside and this market is obviously bullish, right? So when you're building your market structure segment of your rule-based strategy to identify your bias, these are the type of things that you could look at. So if we group these three together, this is more than enough information for you to be able to build your bias, for you to be able to confidently say that the market is moving up or the market is moving down. Remember, in terms of support and resistance, it's purely based on interpretation, right? So it's purely based on what you interpret as support and what you interpret as resistance. And this is one of the things, one of the reasons I do not subscribe to support and resistance. Not that it does not work, but it's purely based on interpretation, right? And under the right circumstances, it definitely does work. When we look at liquidity grabs, this is not based on any sort of interpretation, right? A liquidity grab is a liquidity grab. So if it is something that you do understand, then this could be something that you could be looking at your major levels of support and resistance. So you could wait for price to establish a level of support, right? And then you could look for price breaking into that level of support and then moving above it. And you look to perhaps participate in here, or you wait for your market structure to change, right? So it breaks a high here, and then you wait for some sort of a pullback, maybe into some significant level of support. As you can see, this is still a level of support, right? So if we were to say maybe drag it out there, right? So you wait for that pullback into that significant level and you take that trade, right? So looking at just simply those things, obviously not take that trade, sorry, you're looking at your bias, sort of your bullish move, your next major bullish move or bullish swing to happen from more or less that level, right? So when you're building your bias, this is how you can be looking at it. From the bearish side, obviously, you would simply just look at it from the opposite side, right? So you just basically switch it over. So you'd wait for price to establish. Obviously, price is not going to move like this, right? So be sure to go back to the market and look at it as well. I'll try to get in a few examples if this video is not getting too long. If not, I'll try to do another follow-up video. So looking at this, right? So we wait for price to establish some level of resistance in there, and then you wait for that break above that now takes your liquidity grab at a major level. Whoa. Let's just use this. At a major level of resistance, right? So once that liquidity grab happens, you wait for price to come back in. What's happened in here is a break of market structure, a pull back to your major level of resistance, right? And then you look for something in that area to go to sort of look for a setup in that area, sorry, on a lower time frame. I keep forgetting we're talking about bias because it's basically the same thing on every time frame, right? So you could use these three things to also look for setups on a lower time frame. So let's say, for instance, you're sort of an intraday swing trader, right? What that means is you could hold your trade from 2 hours to 3 hours, or maybe in from a day to 2 days, right? So it could go from an intraday trade to a swing trade. So that's what an intraday swing trader is. So let's say you're an intraday swing trader, therefore you'd be looking at something like the 4 hour chart or the daily chart as your bias time frame, right? So that is where you would be looking at these specific concepts, right? So this would be your major level of resistance formed on your H4 chart. This would be your liquidity grab formed on your H4 chart. This would be your market structure break at this level right here formed on your H4 chart. And then when price pulls into your major level of resistance on your H4 chart, you then drop down to the lower time frame and you start to look for setups or entries or whatever it is, right? Remember, I am going to do a follow-up video on the next step that you would most likely be looking at after identifying your bias, but specifically just looking at these things. These are good enough, right? You don't necessarily need to look at an RSI. You don't necessarily need a FIB. You don't necessarily need a moving average or anything like that. But if you want to add those things as confluence, because remember, it's all about building your edge, whatever makes you feel comfortable in terms of influencing that edge, that probability, and increasing it, you go ahead and you work with those things. Be wary though, not to add too many concepts to what you're looking at, right? Because the last thing you want to do is cloud your judgment and have to make too many decisions and have to look for too many things before taking a trade. Because then what could happen is you could end up getting into a trade too late, missing trades, and so forth, right? So be wary not to look at too many things. That's why I focus specifically on three things in this video, right? So that's basically it for this video. Let's look at a couple examples perhaps on a chart, and let me just try to get a chart up here real quick. Okay, let me just open up a new chart. Let's just go with the chart that I'm not looking at right now. And like I said, let's work with the example of an intraday or a swing trader, right? So my chart should be showing up right now. So what would we be looking at right in this specific instance, right? So let's not go out too far. Let's come in a little bit into this area here, right? So what we can now see in this area here is that price has formed a level here, right? So price came down. We were in a strong bearish trend, right? Let me just move over to the side, right? So we were in a strong bearish trend. What you can see in here is we've basically formed a high here, right? Then we formed a lower low, formed a lower high, that formed a lower low, that formed a lower high, that formed a lower low, that formed a lower high, right? So we're basically in a strong bearish trend to the downside. Let's not worry too much about what's happening on higher time frames, because this is a high enough time frame for you to be able to drop down and start to look for setups on maybe your H1 or your M30 chart, right? So if we look at here, what we see is that after forming this lower low, right? So this was the last lower low that was formed in this bearish trend, and this was the last lower high, right? So should price break above this lower high in this bearish trend, it would have now switched to a bullish trend. Should price break below here, it's now a continuation of the bearish trend. So after this lower low, what do we have? We have price pulling back and forming another lower high, right? But what we have as a result of this lower high is this failure right here to go lower, right? So what that's telling us is this market is now no longer making lower lows. Even though it formed a lower high here, it's no longer forming lower lows, right? So this is now a significant level of support that the market has now formed, right? So what we could do is we could mark this level of support and drag it out. It depends on how you want to mark it up, right? I'm not going to be too finicky about what we're looking at in terms of marking it. So we're just going to put that there as that, right? Now, what do we see here? after this lower high and this failure to go lower, right? So this is technically a higher low, right? So the market has formed a higher low here, right? Why? Because compared to this previous low here, this one is higher, right? So we're now looking at market structure. We've now established our level of support and resistance. We're now reading the market structure. We have not had a liquidity grab below the level of support yet, right? So that should be something that we should expect, because remember, in terms of the overall trend, this was the last lower high that actually made a lower low, right? Only once the market breaks above that lower high has this trend actually changed, right? Because this is the bearish range right now, right? Anything that's happening in here is still lower time frame price action that's happening in there, right? So we're not too worried about that. But this is a higher time frame, so we can read what's happening in here because we can use it to trade on a lower time frame, right? So let's go back to where we were. So the market formed this higher low here, but it did not break this last lower high in here yet, right? But let me just actually draw this out. I think we're just breaking it today, or we've broken it yesterday, actually. All right, so the market has just broken above this last lower high, right? So we could actually expect to see the market maybe pull back and go higher. But to go back to the purpose of this video, we can focus on those two concepts because we found them on this specific chart, right? We also expect for the market to at some point come back down and go below here and do a liquidity grab. But for now, what can we see on this chart? This is a great example. I'm glad I opened up this chart, because what this tells us is understand that your concepts are not going to appear in cognizance with each other every single time, right? What that means is they're not going to appear all together, right? So at some times you're going to have to look at, okay, what concepts do appear situationally, right? So what I always say when I do teach my students as well is you have to understand that your critical thinking must be on point, right? So that you can use your situational awareness to see what is the situation telling you, right? In this scenario, the market failed to make a lower low after making a lower high, right? For me and for my students that I do teach, for this is a very significant thing, right? Now, I'm not obviously going to talk about it on this video, but this is a very significant thing. What happened? This market came up and it broke this high, right? So this is a lower high in this small ass trend that we're having in here. So it did break this high, right? Came back, formed another higher low, and it's now breaking this major high, right? So it's now broken this major high. So we've now got a nice range in here. This market is bullish. We've got market structure in our favor. We're reacting off a strong area of support, right? But we will always expect this market to at some point break below at this area, right? So maybe it'll come back and test something in this area because we've got a nice supply zone in here. If you understand supply and demand, got a nice supply zone in here. So maybe it's going to react off there and come back down, right? So something like that. But basically, this is what I am talking about, right? So you look for your major area of support, you look for your break in market structure. Now your bias is bullish in this market, right? What do we also have? A higher low, higher high, and another higher low. So we're full on bullish at the moment in this market, right? So we could use this information to drop down to a lower time frame now and be able to establish a setup, and therefore drop down to another time frame and be able to look for an entry or take an entry on there. Remember, be on the lookout for the follow-up videos on what are the next steps that you should do or you should be looking to do once you do establish your bias, right? Until then, stay blessed, and I'll catch up with you guys on the next video.